Those were all the top headlines that we're tracking from the world of commodities. You're watching Commodity Center on ET now. I'm Ashesha Adwaryu, and with just a few hours to go for Donald Trump's inauguration ceremony in Washington, D.C. later today, the buzz is already building around his bold plans. Reports suggest he's gearing up to sign nearly 100 executive orders within hours of taking office. But the big question, of course, is what impact will Trump's presidency have on the global commodity market? To help us unpack this, we are now joined by Jim Rogers, author of Street Smarts, and Mr. Ajay Kedia, MD and Research Head at Kedia Securities. Mr. Kedia and Jim, thank you so much for taking your time out and speaking with us here on ET Now. And Mr. Kedia, coming to you first, we've seen the kind of impact on gold prices, on oil prices on account of sanctions that were imposed on Russia. Help us understand what kind of implications do you foresee of Trump coming into power and what kind of impact will it have on global commodity market?
Very good afternoon, Asha. 2024 was a very quiet year for crude oil prices. We have seen market was just trading in a very close with a negligible positive side. But I think 2025 is going to be a very important year looking to Donald Trump, because one side we have seen all central banks are cutting down their interest so that economy can be on their foot back, so that demand could be slightly positive. But no doubt IEA, EIA and other forecasters says the demand would be slowly and steady, but the production from US is going to be on higher side. So at least we can say in 2025 the supply side would be quite adequate, that can create pressure on crude oil prices. But in last 15-20 days we have seen, as 2025 has started, we have again seen the aggression from US creating more sanction on Russia that has triggered the fresh buying, and we have seen almost $10 rally. So I think in 2025 we may see higher supply in crude oil prices, which will create gap, but geopolitical tension will keep prices on toes. So overall, we can see a broader range of for WTI could be between 90-92 on higher side, but lower side, maybe we can see 64-65 as a immediate support.
Alright, so that's as far as oil prices are concerned. And Jim, coming to you then, what do you expect from Donald Trump? Will Donald Trump's follow up on his pledges about tariffs, about tariff cuts and immigration? What is your sense and what are you making of the latest developments?
Well, I'm afraid Mr. Trump will probably launch trade wars. Mr. Trump thinks that everybody should listen to him, and I am afraid that means we will have more trade wars, more trade strife.
But Jim, if you can be more specific, what kind of announcements do you expect which will have an impact on global asset classes?
I'm afraid that he will put tariffs on foreign countries, maybe even some of our friends like Canada and Europe, because Mr. Trump thinks that everybody should do what he says.
Those are some of the kind of announcements that we are expecting. But Mr. Kedia, coming back to you, China has announced a slew of stimulus measures for 2025. And now with US imposing sanctions, if at all it were to come through, what impact will it have on the Chinese economy and indirectly on the demand for base metals that comes in from China?
Yeah, I think in the morning I have just going with news that Xi Jinping has been invited for US also. So I think the impact already in last couple of months we have already seen, but I think with the China has already insulated with their currency devaluation, or we can say stimulus going on in the market. I think everything has been discounted. But one more thing is base metal like steel, base metal counter like aluminium has already seen concerns in regard with the European and Russian that could create support. But coming particularly on China, the increased tariff are expected to raise the cost for commodity like steel or aluminum and other base metal. So I think initially the demand from China is going to be positive, but I have to see how US export to China in regards with the other commodities will impact. So overall, I think base metal, one side demand would continue to support, and sanctions on Russia and other geopolitical will continue to support the prices, but upside would be really capped. Among all the base metal, I would prefer to go with aluminium, where we can see on LME maybe prices can go towards the level of 28-28.50 as of now. So first half is going to be positive for metals, but second half have to recheck how the demand and how the relation comes back again.
First half is going to be positive for metals, but we'll have to wait and watch of how second half pans up. But Mr. Kedia also wanted your thoughts on ferrous side, especially when it comes to iron ore and steel. Iron ore prices plummeted nearly 10% in 2024 on account of weak demand from Chinese real estate sector. How do you expect this to shape up going forward?
Definitely, if we talk about the performance of iron ore, definitely it was slightly undertoned because of the Chinese. Because in last couple of we have much of the time we were depending upon the China's demand. But I think in 2025 already potentially stimulus measure from Beijing, or we can say Chinese Minister of Commerce has announced the plan for boost the consumption. But have to see how it could be implemented in the economy. That is why I am more hopeful for first half that whatever the policy that has been taken consider will have an impact on iron ore prices. Maybe slowly and steadily we would be heading towards the level what we have seen in the month of May, that is around 120 122 should be the higher level. But as of now, upside would be really capped unless and until demand re-emerges from China side.
All right, so that's as far as the impact on Chinese ferrous real estate sector and its impact on ferrous metals will be. But Jim, coming back to you, help us understand the kind of policy changes which Trump had implemented last time and how is it expected to be different this time around?
Well, it'll be different this time around because Mr. Trump cannot be reelected. So whatever he does, it's going to be pretty strong because he knows he will never run for office again in America. So whatever he does, he thinks it will be the final answer.
And also wanted your thoughts on crude oil. We just spoke about crude oil with Mr. Kedia, but what are your thoughts? On one side, we have seen signs of easing Middle East tensions, but on the other side also we have seen some US sanctions on Russia, which has kept, which has kept oil on the boil. It is currently trading at about $80 per barrel. Where do you see it headed going forward?
Well, Mr. Trump will do what he can to drill for more oil in the U.S. That will bring prices down a little bit in the United States because there will be more oil produced in the U.S.
And since you track commodities in greater detail, also wanted your thoughts on precious metals. We have seen a solid run in 2024, gold up 22%, silver up 24%. What kind of moves do you foresee in 2025, and do you expect continued buying from central banks globally to continue in 2025?
I will continue to buy gold if it goes down. Right now, I will buy silver because silver is cheaper. Silver is down a lot. Gold is making all-time highs. So I prefer silver to gold right now.
So you're more bullish on silver as compared to gold. And Mr. Kedia, coming to you, you did talk about aluminium prices and that your outlook continues to remain very positive. But apart from aluminium, any other industrial metal that you're positive on?
I think we should, Roger correctly told that silver is more bullish because it's have some property of base metal. Because here in if you talk about the base metal, I would be slightly positive for copper and zinc also. These three commodities, aluminium, copper and zinc, these three commodities seem to be trading with a positive price. Maybe another 14-15% gain should be there. But definitely I would also vote for silver because gold silver ratio currently trading around 89-90, and which is a historically high level. And with the consumption from the solar, EVs, and photovoltaic demand, I think silver looks very attractive. Maybe this can surprise if we talk about the gold silver ratio comes down to the level of 72 also, then we can see a rally around 28 to 30% in silver rather than gold. So I would also support silver from current level. Also in international we may see level like $40 mark, but on domestic market this time we can easily achieve 1,30,000 level mark.
1,30,000 is your target for silver, and 28 to 30% upside is what you foresee. But Jim, same question to you. Within industrial metals in particular, can you name some commodities which could rally from here on in the current calendar year?
Well, I mean, nearly all commodities are down. Oil is down a lot from its all-time high. I think oil is certainly a good place to invest, but nearly everything, sugar, everything is depressed. And so they're probably good investments. as the world gets better. We're going to have more inflation, and when you have more inflation, that is good for commodities.
And coming back to Donald Trump taking over, how will India's relationship with US change, especially if US imposes heavy tariffs on India?
Well, I hope that America always gets better with India. We can trade more with India. India is changing a lot for the better. I like what I see happening in India, so I hope that America and India will get closer together and will trade more together.
And as far as Indian equities are concerned, are you invested fully or any percentage allocation of your portfolios into India? And within Indian equities, which sectors or themes are you very bullish on?
Well, I sold India too soon. I am waiting to see what goes down the most. And if something goes down, I hope I'm smart enough to buy more shares in India. But I do not know what yet. It depends on what goes down the most.
Right, so that's the view as far as Indian equities are concerned. But Mr. Kedia, coming back to you, and since you are with us, also help us understand and give your thoughts on soft commodities. There are several soft commodities which saw a solid run up in 2024. Cocoa prices, for instance, ran up 190%. We had coffee prices which were up nearly 75% since the beginning of 2024. Where do you see soft commodity market headed in 2025?
They were totally surprised that cocoa prices has rallied very well because almost we have seen there are many regions like decline in Arabica production by almost 5% in domestic market. But important was the weather condition, because in international we have already seen the Brazil production has reached almost 66.4. So I think the weather concern was the major trigger. Because of that, we have seen cocoa prices has rallied very well. In fact, still we expect the first couple of months or first quarter prices would remain on a positive side. But as we move in second half, the supply should be again reinstated. Because of that, we may see again prices coming back down. But as per ICCO reported, the global cocoa deficit has reached around 374,000 ton in 2024 because of aging of trees and disease. That is why this rally of almost 190% has been seen. But second half is going to be a cool off for cocoa prices, where we can see prices coming back in the normal range of, let's say, 9,000 level. But in case of coffee also, the rally has been markable around 70% plus. We have seen a rally. The supply side concerns will be there, and consumption is slowly and steadily rising. So I think support would be there, but we won't see whatever the rally in 2024 we have seen in soft commodity. Sideway positive momentum would continue to be there in soft commodities.
Momentum is expected to continue in soft commodities. That's the word coming in. Mr. Kedia and Jim, thank you so much for taking your time out and helping us understand what the implications could be on the global commodity market. But moving on, big relief for the sugar sector. The government has now permitted export of about 1 million tons of sugar. This is a significant shift, as exports were completely banned in the sugar season 23-24 and previously capped at about 6 million tons in the year earlier. However, INCRED believes that this export allowance is unlikely to have a major impact on the financials of the sugar sector, given low prices, small quantum of exports, and the absence of subsidies for transportation and exports. Additionally, the potential hike in SAP in Uttar Pradesh is adding to the existing challenges faced by the sugar industry. That's the latest development coming in from the sugar sector. But shifting focus to our next segment, Did You Know? And today we put the spotlight on oil. Did you know that the largest conventional oil field is Saudi Arabia's Ghawat oil field? This oil field contains about 50 billion barrels of oil and is able to produce 3.8 million barrels per day. Venezuela has the largest amount of oil reserves, about 300 billion barrels, accounting for nearly 18% of the world's total reserves, followed by Saudi Arabia, Canada, Iran and Iraq. That's all the time we have on this edition of Commodity Central. Slipping into a break, but we'll be back in a minute. Stay tuned.
If you like this video, then like, share and subscribe to ET Now.